Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is rejecting to the upside a quite strong structure, support, and demand. In fact, what we know is that this level was acting as quite strong support starting from here, from which all this push to the upside started. And if we extend it to the left, we can see that this is exactly the zone that the market broke to the upside, retested as support, and rejected to the upside also here. And we can also notice how just a few months ago the market tested the area once again and rejected it to the upside. So here on the monthly, we are rejecting support. However, at the same time, we're also now facing resistance because here at the top, we have this previous level of resistance from which all these previous rejections to the downside started. Then the market broke above that zone, and this previous resistance was turned support here, creating this rejection to the upside. Now the market broke below the level, so this previous support is now turned resistance here. So from a resistance zone, there is the possibility of seeing some short-term bearish price action away from the level. So what it seems here actually is that this market is currently trapped in between these two levels. We have the resistance here, which clearly the market is facing right now, and we have the support here at the bottom. So we kind of have a range-bound market in between these two levels of structure. However, as we're testing the high, there's a higher probability of seeing some bearish price action being created. Now, let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, the situation is quite clear. In creating this push to the downside, the market had created this M pattern. And after the creation of an M pattern, what you would expect is for the market to create a rejection to the upside. And in fact, that is exactly what the market is currently doing. So creating this rejection to the upside from a weekly standpoint. We can also notice that we are currently approaching the previous high. So from a weekly standpoint, this previous high was acting as resistance. Now the market is approaching the area again, and there is a possibility for the market to once again find some resistance at this level and potentially create a rejection to the downside away from that zone. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, this is where things get very interesting, because what we can know is that while the market is approaching this strong resistance, at the same time, it is also creating a bearish pattern. In fact, it is creating this overextended W formation from a daily standpoint. Now, when there is the creation of an overextended W, in my experience, there is an increased probability of seeing a potential rejection to the downside, because essentially the market is overextended to the upside in need of a correction. And usually the first downside target that I have in my experience is that the market likes to go and retrace to the 0.32 of the Fibonacci taken on the impulse leg. Let me see if we find an example of such pattern. For example, here we can see how the market had created this overextended W formation, and then the market followed through with the rejection to the downside. So very similar pattern. Now, from a daily standpoint, we can also notice that this level is strong structure. This zone, in fact, was acting as previous support, preceding all these minor rejections to the upside. Then the market broke below the level, and all that previous support was turned resistance here. So at the moment, the market is testing this previous support and resistance. So there is an increased probability of seeing a potential rejection to the downside below this level. Now, if we look here at the data for the JPY, what we can notice is that with the last reports, net positions have been in the long-term decrease. We went from 65K to 2.3K, but in the very short term, we have seen a massive increase of net positions. We went from minus 22.6K up to 2.3K net positions, meaning that institutions with the last report have increased their net positions massively, going from a negative net positioning to a positive net positioning, meaning that institutions went from having more shorts than longs to now having more longs than shorts. So essentially the complete opposite. And keep in mind that now that we're looking at the data for the JPY, we're actually already looking at JPY USD because all currencies on the spot are traded against the USD. So as institutions are increasing their net positions massively, it means that actually institutions by longing the JPY are actually shorting USDJPY. Or another easier and more intuitive way of looking at it is that if institutions are making the JPY stronger, so adding longs and closing shorts, they are making USDJPY weaker. But in reality, what they're doing is that by longing the JPY, they must be shorting USDJPY. It's that simple. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So from a daily standpoint, at the moment, this area is acting as strong resistance. And there is a possibility of seeing more institutional longing of the JPY inside of this area, meaning more institutional shorting of USDJPY inside of this area. So if institutions will continue to make the JPY stronger, so USDJPY weaker, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to a bearish market at that point, I wouldn't be surprised to see a potential rejection to the downside, for the market to follow through with the rejection to the downside, given the institutional shorting of the shorting of USDJPY, so longing of the JPY. This definitely wouldn't surprise me. Now, all this general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg. In fact, if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website. Here, you can gain access to all my courses, so 26 plus sessions of courses that go from the very basics of becoming confident with charts to all the way to building automated trading algorithms using the MQL4 language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer to build and optimize those portfolios of strategies. So a lot of very interesting stuff that you really cannot afford to miss. You also have the possibility to gain access to the trading station software with Telegram notification integrations to really accelerate your learning and your becoming confident with charts. You have the possibility to gain access to one-on-one private mentoring directly with me from your student dashboard, as well as the COT data software. And you also have the possibility as a student, this is only for already members, to gain access completely for free to my MT4 EA's algorithms for free again. And here, in fact, you can see that there is all the presentations of my algorithms. And if you continue to scroll down on the website, you will see that you have the possibility to gain automatically access with the email and password that you will create during the sign-up process. So definitely looking forward to see you on board and see you on your student dashboard. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.